Now see income and expenditure account. The next financial statement of the not-for-profit organization is income and expenditure account. First one is receipt and payment account that we have already discussed. We have learned how to prepare it. It is just a summary of your cash book, all the cash transactions done during the year. Now, next is income and expenditure account. It is prepared at the end of the accounting period to determine surplus or deficit. As we are preparing profit and loss account in the case of profit earning organizations, same is the case with income and expenditure account. If you see broadly in the profit and loss account also what we are writing the incomes as well as expenses. So that is also an income and expenditure account for a trading concern or for a manufacturing concern, because a not-for-profit organization don't have any objective to earn profit. That's why the account which is prepared for calculating their profit or loss, that is technically termed as income and expenditure account. And the profit, if any is there from their activities, obviously if you are doing any business activity, either you will be having some profit or you will be having some loss. But because your objective is not to earn the profit or loss, that's why the terms are used differently. That is surplus for profit and deficit for loss. Now it is prepared following accrual basis of accounting. Obviously, you will follow the accrual basis of accounting in this statement as you are following in profit and loss account also. There you are making adjustments for unrecorded transactions for regarding like outstanding expenses, prepaid expenses. These all adjustments will be done here also. Revenue expenses for the accounting period are taken whether they have been paid or not. So, in profit and loss account also what you are writing only revenue expenses and revenue receipts, revenue incomes. Same is the case with income and expenditure account also. You will be recording here only your revenue expenses and revenue incomes. So the cash transaction is not a matter there. Suppose you have to pay the salary but you have not paid the salary, that will be termed as outstanding salary. That will also be recorded here. This is the point. Same is the case with revenue incomes also. Then your capital expenditure and capital receipts are not considered. So if you are purchasing any asset, that will not be written in this account. That will go to the balance sheet. So your capital payments and capital receipts will go to the balance sheet portion. It will not go to the income and expenditure account. The nature of the account is nominal account. So now coming to the features of income and expenditure account. First thing, the nature is it is a nominal account. Then basis of accounting, obviously in receipt and payment account, the basis of accounting is cash basis, but in the income and expenditure account, the basis of accounting is accrual basis. Then accounting period. So obviously it will record all the incomes and expenses for that current accounting period, whether that has been paid or received or not. So its opening balance will not be there, but its closing balance will be either surplus or deficit. Then adjustments will be done in this account, obviously. Capital expenditure. Now we have to be clear about various types of expenditures, especially regarding not-for-profit organization. Like first is capital expenditure. So you now clearly know this. We have discussed in class 11th syllabus also, that capital expenditure is always for your long-term expend. The benefit is for long-term. Like if you have purchased car, that will be treated as capital expenditure because it will give you benefit for more than one accounting period, for more than 1 year. So that's why it will be considered as capital expenditure. It results in acquisition of assets, improvement of existing assets. So your assets will either improve, their value will increase, or you will be having some new assets. Then it will be termed as capital expenditure. Then revenue expenditure. So revenue expenditure will be the expenditure which will give you benefit only for the current accounting period. The benefit is for short term. Like you have paid salary, you have got the benefit. Now for the next benefit, you have to again pay the salary. So some expenditures will give you the benefit only for the current accounting period, and some will give you the benefit for more than one accounting period. On that basis, they will be classified as revenue expenditure as well as capital expenditure. Now next is capital receipts. So capital receipts means the receipts which you normally not received in the course of business, but once in a while, and it has especially for not-for-profit organization, what will be the capital receipt? The receipts which are specific receipts are like if you have received any specific donation for any specific purpose, like if you have received some amount for construction of building from someone, you have received donation for the construction of building, so that will be termed as your specific receipt, and that specific donation will be termed as your capital receipt. Same is for receipt from sale of fixed assets. If you are selling any building or any other asset, so whatever amount you are receiving that is not in your normal course of business, that will be termed as capital receipt. So capital receipts will be recorded separately and revenue receipts will be recorded separately. Receipts which arise in the normal course of business will be termed as revenue receipts. So this is the format of income and expenditure account. So you can see the debit side. On the debit side, various expenses have been recorded, and on the credit side, various incomes have been recorded. So two salaries. Last year you have done various adjustments. These adjustments we will be doing in the current year also. So if you don't remember them properly, just revise them from the 11th class syllabus. It will become easy for you to understand them better. Then to rent, to insurance premium, to audit fees. These all expenses last year you have written in your profit and loss account also. Audit fees, honorarium, telephone expenses. So whatever the expenses you have done of revenue nature, that you will be writing in your income and expenditure account. Then you have various revenue receipts also, where the main revenue receipt for the not-for-profit organization will be this by subscriptions, the money contributed by the members in the not-for-profit organization for its functioning. It can be a periodic payment, it can be a monthly payment, it can be a half-yearly payment, it can be an annual payment. As per the rules of the organization, the money will be received from them. Then next is by entrance fees, by general donation. So if there is no specific donation, like you have received donation only, that will be considered as revenue receipt. only the specific donation for any specific purpose, if received, that will be considered as revenue, capital receipt. Legacy, sometimes people donate their will in the favor of some not-for-profit organization. Then by rent, by gain, by sundry receipts. So whatever the revenue receipts are there, that will be written in the income and expenditure account. Now, difference between income and expenditure and profit and loss. However, a lot of similarity is there as regarding income and expenditure and profit and loss. So see difference between income and expenditure account and profit and loss account. So first difference is regarding object. So object of preparing income and expenditure accounts is to determine the surplus or deficit. However, the object of preparing profit and loss account is to calculate the profit or loss, net profit or loss. Then it is prepared by a not-for-profit organization. It is prepared by a profit-earning organization. Then third one is method. It can be prepared from the trial balance, but it is mainly prepared with the help of receipt and payment account. As I have told you yesterday also, that in our questions mainly the base will be the receipt and payment account. On the basis of that, we will be preparing our income and expenditure account and balance sheet, because receipt and payment account is recording both types of receipts, capital receipts as well as revenue receipts. In the same manner, it is recording also capital expenditure as well as revenue expenditure. So all the expenditures and all the receipts are recorded in receipt and payment account. So we get almost all information for our purpose from the receipt and payment account also. But profit and loss account is always prepared with the help of trial balance only. Now the balance of it will be called surplus or deficit, and the balance of profit and loss account will be called profit or loss, net profit or net loss. So this is the difference. Then there is a difference between receipt and payment account also. You can now yourself also write various differences between the two. Like the purpose of preparing receipt and payment account is to just show the summary of your cash account, cash and bank balances, and purpose of preparing income and expenditure to calculate the profit or loss, or you can say surplus or deficit. So it is a real account. Receipt and payment account is a real account, whereas income and expenditure account is a nominal account. Similarly, form. So debit side of it will be receipt and credit side will be payment. However, debit side of income and expenditure will be a payments, and means expenses, and credit side will be incomes. Balance, opening balance will be there and closing balance will be there, that is showing cash in hand and cash at bank. However, regarding this one, income and expenditure, there is no opening balance, but there can be closing balance. And whenever you are having any closing balance, that will be either surplus or deficit in income and expenditure account. Some more differences are there. So in receipt and payment account, you can record both types of transaction, whether it is a capital transaction or whether it is a revenue transaction. However, in income and expenditure, only revenue nature transactions will be recorded. Similarly, adjustments will not be done in receipt and payment account, but it will be done in income and expenditure account. You can record any period transaction in the receipt and payment account, but you will not be recording. You will be recording only current year transactions, current year expenses and incomes in the income and expenditure account. There will not be recording of any next year or previous year transaction. These will always be adjusted. Then depreciation, obviously depreciation is a non-cash item, so it will not be recorded in receipt and payment account, but it will always be recorded in your income and expenditure account. So that is all about income and expenditure theory. Just try to complete it.